Once it becomes Indian income, friends, what will happen? It is taxable irrespective of your residential status. Whether you are a resident and ordinary resident, or resident but not ordinary resident, or non-resident. Once it is an Indian income, it becomes taxable. That is the reason why what is stated in case of a resident but not ordinary resident and a non-resident, it is not taxable if the income is not received in India, and it is taxable if the income is received inside India. See, point here is inside India, outside India. Concept comes for what reason? Comes for what reason? Once the income is received in India, it becomes an Indian income. Once it becomes Indian income, it becomes taxable irrespective of the residential status. So, with that understanding, you just read there, resident but not ordinarily resident and non-resident. It is not taxable if the income is received outside India, and it is taxable if the income is received in India, is the point. Since we are conceptually strong with what you call our section 5 as well as the Indian income and the foreign income concepts, despite of the negligence on the part of DTP operator, still we are able to do it. Thank you. Back to the point. Then the next part. That's why, friends, I always give due respect to the DTP operator, because he can change our lives like anything. Right? Disputed ownership. What is the disputed ownership? Because in a life, what is most important? Communication. See, I gave a very good letter to my typist and asked him to type. That day he is angry on me. And today everything without signature it goes. Email, so many mails are there. Right. Where actually I want to convey something, he will type and put it through my mail. Right. So like that life can, so many chances of communication gap is there. Right. In management also, if you get a concept of barriers of communication, there you add one more point, that barriers of communication are DTP operators. Right. Back to the point, disputed ownership. What is this disputed ownership? See, if we allow that income will not be taxed once there is a dispute on the income, who is the owner of that particular income, there will be so many cases in the courts. Because what will happen? My father gave a one property to my brother and one property to me. Now, just to see that the taxation concept gets postponed, we will file suit against each other, and now we will say that till the court do not decide about who is the real owner, we will not pay the tax. Like that, if we say, how the income tax department will get the proper revenue. So when I explained the concept of income, there what we said, dispute will not postpone the tax liability. Dispute relating to the ownership will not postpone the tax liability. Similarly, legality or illegality also will not postpone the tax obligations. So even if the ownership is in dispute, first the law is saying what? Whoever is in receipt of the income, let them pay first the tax. Subsequently, if it is proved that that person who received the income is not the real owner, then what will happen, friends? Then we can very well ask that particular person who is the real owner to pay the tax, and we can refund this particular amount to the person from whom we collected. But in any case, law is clear that on a disputed ownership basis, you cannot postpone the payment of the tax. What it is? SSE who is in receipt of the income or SSE who enjoys the possession of the house property as the owner, though claims is disputed, is still assessable. The decision shall rest with the IT department as to the person who is to be treated as a SC in respect of the rental income. Who has to say that? It is left to the IT department. Then friends, we have to look at property held as a stock in trade. See, point here is there is a construction, and before all the flats gets sold, what happened? For a temporary period, those flats got let out. Even in that situation also, the income is to be taxed under the head income from house property. Nobody can say that this is stock in trade, this particular flats are being held as a stock in trade in the business. So, any income arising from that will become business income, like that you cannot say, because your charging section is very clear. Only in one situation you can treat it as a business income, only when the SSE is occupying that particular property for his own business or profession, or he lets out that for smooth functioning of his business. Only in that situation you can tax it under the head income from house property. But other way around, even if the property is held as a stock in trade, the income arising therefrom should be treated as what? Should be treated as a income from house property only. So, here property held as a stock in trade, asset in business, annual value of the house property is taxed under the head income from house property. Even if the property is held by the SSE as a stock in trade, even if the SC is engaged in the business of letting out of the property, or the SC is a company incorporated with a main objective of owning a house property, whatever be the profit, house owning can never be a trade or a business for the purpose of the Act. Any rent derived from the house property will fall only under the head income from house property. So, an example is also given that A is the owner of the 10 houses, he lets them out on a routine activity. Even then, rent received from such letting out cannot be charged as a business income, but it is to be assessed as income from house property only. So, nobody can argue that this letting out activity we are carrying it out as a business activity. So, any income arising therefrom, we will tax it under the head income from business or profession, you cannot say, because section 22 is very clear that by letting out of the property, whatever that you get will be taxed under the head income from house property. Of course, it is stated more refined manner. What is it? Annual value of the house property, annual value of the building and land appurtenant thereto shall be taxed under the head income from house property, except in a situation where the owner occupies the same for his own business or a profession. So, even if you are letting out, and that letting out activity is a commercial activity also, still the income will get taxed under the head income from house property only. And then friends, the next aspect, exception. Yes, what is the exception? That is, if the letting out is only incidental or subservient to the main business of the SSE, then the rental income is chargeable as a business income. This also we have discussed. What is it? There is a company, it constructed the flats and gave the same to the what you call employees, so that the office van will come to that quarters and pick up the people and keep the people in the office in time. This is all you can say for smooth functioning of his business. So, in that situation you can very well treat it as a what you call income from business or profession. Then one more exception is what? When rental is collected both for letting of the house property and other incidental facilities like guest house accommodation or safe deposit lockers, and splitting of the rent is a complex, then it is taxed as a business income. In case of a composite kind of situation where it is not possible to bifurcate how much is that you are collecting towards the rent and how much is that you are collecting towards the what you call facilities that you have given, then in that case it is being taxed as a what you call business income. Then house owning can then the next aspect of it is composite rent. Composite rent is like where accommodation is provided along with the furniture, and then that situation the rent that you are receiving towards the property and the furniture, you call it as a composite rent, where both the components are separable. Then accommodation, whatever the income that you are getting, that income will be taxed under the head income from house property, and for the services and the furniture, then that will be taxed under the head income from other sources. Where they are inseparable, that is how much is the rent that you are getting for letting out of the house property and how much is the rent that you are getting for letting out of the plant and machinery, then it gets taxed under the head income from other sources. Entire composite rent will get taxed under the head income from other sources. In the exception 2, what we were saying is that you are doing while carrying out the business. That is the reason why you are putting it as a business income. See, we can revisit that PowerPoint. When rental is collected both for letting of the house property and other incidental facilities like a guest house accommodation or safe deposit lockers, and splitting of the rent is complex, then also it is taxed as a business income. So, there that particular letting out of the plant and machinery and the facilities, you are doing it on a business basis, and these two things, letting out of the house property and letting out of the safe lockers and the guest house accommodation, there the splitting up is not possible, then you go for the business income. But in a normal situation where you are letting out of the house property with certain facilities and all, then where it is inseparable, the income will get taxed under the head income from other sources. Where separable is possible, separation is possible, property income gets taxed under the head income from house property, whereas any income arising out of this furniture letting will get taxed under the head income from other sources. Then annual value of the building property used for the business of the firm in which the SSE is the owner or the partner. Friends, earlier we studied the point. What is the point that we studied? That is, in case if the SSE uses the same for his own business or profession, then that gets taxed under the head income from business. Here when we say SSE uses the same for his own business or profession, that usage need not be sole usage by the SSE. He can also use the same along with the others also. So, on that context we say the income will get taxed under the head business or profession. So, just look at few high courts have held that annual value in such case is not taxable in the case of partner by virtue of section 22, if the income of the partnership business is chargeable to tax. But Karnataka High Court has held that notional income is taxable in the case of the partner. First thing that we want to look at is it that any income arises in the hands of the partner? Once you say yes, then under which head it is to be taxed. So few high courts are of the view that in that case annual value is not taxable, because he is using the same for his own business and profession, of course not alone but along with the others. So section 22, it is out of the purview of section 22. And then of course the Karnataka High Court says what? Once the situation is like that, you have to tax on a notional basis the income in the hands of the partner. But here, why the court says like that? Karnataka High Court has held that notional income is taxable in the case of the partner, as section 22 does not exclude the annual value in such case, where the house property belonging to a HUF was occupied by the firm, which the HUF was a partner through its karta for carrying of the business, and no rent was charged. It was held that annual value is not chargeable to the tax by virtue of that. So the occupation of the property by employees of the sister concerns cannot be treated as occupation of the building by the SSE for his own business. See, now the point here is, I got the house property, I am doing business, I am letting out this particular property to my own employees as their quarters and all. Then in that case, yes, income gets taxed under the head business income. But in case if I am letting out this particular property to my sister concerns employees, then the income what I am getting should get taxed under the head income from house property only. It cannot be stated as being taxed under the head income from business or profession. Whereas if I am a partner of a partnership firm and I am letting out my house property to the partnership firm, then any income arising therefrom gets taxed under the head business income, because the very intent of the law is what? When it said that the SSE uses the same for his own business or profession, it is not the alone usage, it can also be along with the others is the points. Then of course now you are through with this particular concept, because at the final level n number of times they have asked this particular question. Let me put you to a clarity. Clarity is a simple thing, that is, property belongs to a partner and that is being used by the partnership firm. Then income will get taxed under the head business income, not under the head income from house property, because usage includes usage along with the others. And one more important thing that you have to understand is, if letting out is made not to our employees, that is SC's own employees, but to the sister concerns employees, means definitely the income gets taxed under the head income from house property only. Then deemed ownership. After section 22 we are jumping to 27. Why section 22 is read along with the 27, friends? 22 discuss about the chargeability, 27 also to a greater extent discuss about the chargeability only. Why? Because 27 gives the instances where although the SSE is not the owner of that particular property, still he shall be regarded as a deemed owner of that particular property. Accordingly, the income will be taxed under in his own hands only. See, earlier also I explained about the deemed ownership by saying that wherever the SSE want to make a mischief, law caught that mischief and brought it into the deeming fiction. So here try to understand what happened. A particular SSE transferred his house property to his spouse or the minor child without adequate consideration. In that situation, although the spouse or the minor child are the legal owners, your section 27 says what? Only the transferor shall be deemed to be the owner of that particular property, and the income will be taxed only in the hands of the transferor only. Of course, exceptions are what? Transfer to a spouse on an arrangement to live apart. Divorce लेके live apart agreement हो गए, और in that situation this clubbing provision or the deemed ownership concept do not arise. Similarly, transfer to a minor married daughter for inadequate consideration, even that situation also this deemed ownership concept do not arise. Friends, try to understand both these things law is not encouraging. Only thing is that if that is happening, in that situation law says yes, we are kind enough for that pathetic state, right? You cannot encourage the people to live apart, you cannot marry the minor daughters. Don't be under impression that income tax is encouraging these two things. Got the point? If some SSE is in that status, you can say that yes, there is a very beautiful provision, be happy for this. Why the law is kind enough in these situations, friends? See, in the act of transferring to the spouse and the minor child, दाल में काला कहाँ है? Transfer is not made for adequate consideration. There your very intent is what? To reduce your tax burden by shifting the income to the people who don't have the real income. Whereas, if genuinely people got separated, there as an arrangement for living apart, the property is getting transferred by husband to the wife, then उनका गलत क्या है? So income tax law is kind enough to say that in that situation we will tax it only in the hands of the real owner only and not in the deemed owner. दूसरा चीज क्या है? Minor married daughter को which fool will transfer the property for inadequate consideration? If you want to save the tax, then what will happen? There is always a danger or possibility that the son-in-law may fully eat away that particular property, right? So in that case, the SSE may feel it comfortable to pay the tax rather than completely property getting lost. More particularly for the minor, major married daughters से ही प्रॉब्लम आता, तो minor married daughters से नहीं आता क्या? तो point is there they understood the genuinity of the transaction and they said the clubbing is not there. But in any other case, to the spouse and to the minor child, if the property is getting transferred for inadequate consideration, then who shall be deemed to be the owner? It shall be the transferor is the point. Then the next. Then in case of a property of the HUF, who shall be the deemed owner? Senior most member of the family shall be the deemed owner. That is a property income of the HUF which is coming from the imperitable estate. Who shall be deemed to be the owner? The senior most member of the family. So that is one another disadvantage of being the senior most member of the family, because law says what? In that case of that income from house property, who shall be deemed to be the owner of that particular property? It is the senior most member of the family. Similarly, what will happen? There is a company or there is a society. What they did, They collected the money from the members or the shareholders and constructed a very big plaza and allotted the flats to the members or the shareholders. Now the ownership of the building continues to be with whom? With the company or the society only. Company or the society only. But they got the right to occupy that particular property as long as they are members or the shareholders. In that case, although company or the society is the legal owner of the property, legal owner of that particular property, who shall be the deemed owner of that particular property? Whoever is the member or allottee of that particular property, then that person shall be deemed to be the owner of the property. And then friends, we have power of attorney transactions. Now, here in Hyderabad we have Krishna Nagar and Yusuf Gouda. वो सब वहाँ पे क्या रहता? Transactions पूरा power of attorney transactions ही रहता. That is, power of attorney will be given for the lifetime. It is not getting registered. It is not getting registered. Who is the owner of the property? Legal owner of the property. Legal owner of the property is the one who is the registered owner. Then people comfortably transferring the properties through the power of attorney transactions. See, my making a sale of the property to you and get it registered to you, or my giving a power of attorney to you to enjoy this property for you 100 years, both are one and the same or not? One and the same. That is, my giving power of attorney, of course you may say that, is it a revocable or irrevocable? We are talking about an irrevocable situation only, not for 12 months or 1 year like that. It's not the point. In that situation where it is a case of holder of a power of attorney transaction will be the deemed owner of the property. See, through power of attorney transactions, if the properties are getting transferred, power of attorney holder shall only be deemed to be the owner of that particular property. Similarly, one more important thing that you have to keep in the mind is transfer is made by part performance of the contracts. What do you mean by part performance of a contract referred under section 53 of Transfer of Property Act? I got a property. I entered into an agreement with Rishita and Rishita paid me 30 lakhs. I handed over the possession of the property to her. We have got a sale agreement. But what is not happening? Registration is not happening. Merely because registration is not happening, can Rishita say that the legal owner of the property is Chakravarti only, so go and ask the tax from Mr. Chakravarti only? No. Once that is entertained, what Mr. Chakravarti will say? That already I handed over the possession of the property to the Rishita and there is a sale agreement, why I should pay? A dispute may arise. So to put an end to such kind of dispute, what the law said, once it is a transfer in part performance of a contract, in all that situation, only the transferee shall be deemed to be the legal owner, deemed to be the owner, although transferee is not the legal owner. So I think I am clear with this point. Please listen once more. That is, what do you mean by part performance of a contract referred under section 53A of Transfer of Property Act? That is, there is a property owned by A and A entered into an agreement of sale with the B, and B gave the total consideration to A, and A handed over the possession of the property to the B. What is not happening is the registration. By a mere fact that registration is not taking place in the name of Mr. B, B cannot say that I will not pay the tax, because your section 27 says what? In case of transfers of the nature referred under section 53 of Transfer of Property Act, it is not the transferor, it is the transferee who shall be the deemed owner of that particular property. Then friends, you have this lease transactions. See, I got a property. Now, if I say I am giving this property on a lease basis to Mr. Habib for about 70 years. इसका मतलब क्या हुआ? I want to make sale. Instead of saying it as making a sale, we are putting it that we are giving it on a lease basis. So this lease is for the substantial useful life of that particular asset. It is as good as a sale transaction only. So there also what the law says, it is not the lessor, it is the lessee who shall be deemed to be the legal owner of the property. बहुत सारी स्टोरीज हमारा एसएससी बनाते, वो सब के लिए ये डीमिंग फिक्शंस आते हैं यहाँ पे. Why Habib is not interested to take this particular property in his name, sir? Because उन्होंने बड़े आदमी हैं, हमें छोटे आदमी हैं. उनके पास क्या है? Already taxable income taxed at a maximum marginal rate of 30%. हमारे पास इनकम अभी 10% स्लैब रेट में ही है, राइट? तो उन्होंने क्या बताते हैं हमको? I have got full confidence on you, Mr. Chakravarti. Not only on you, also on your legal heirs also. So I don't worry about this, but I am more worried about the taxation. And moreover, what he says, if that I take to my name, I have to pay 30%. In your name, रहने दो, you pay 10%. Then it would be comfortable, and I will give you some donation of that 10 more percent, because you are helping me to reduce my tax burden by 30%. होता, उसको पकड़ने के लिए हम क्या बताए? In this situation, that is where a person who acquires the right in respect of any building or part thereof by virtue of a sale or exchange or a lease for less than 12 years. For not less than 12 years. For not less than 12 years. तो ये 12 years का स्टोरी मालूम है अभी भाई? 12 साल तुम हमको नहीं मिले तो हम क्या सोचना? रिलेशन छोड़ गए, राइट? तो that is the reason why always whenever we meet somebody we will say, now and then you please give a call, so that we will be knowing that you are alive. You should tell about your good being to us. 12 साल तक आप नहीं मिले तो हम क्या सोचना? तो इसलिए 12 years period, what is the fun of the 12 years? Similarly, don't allow any tenant to occupy your property for more than 12 years. ताकि क्या होगा? उन्होंने उसके ऊपर possessiveness feeling करके, possessive feeling से उन्होंने क्या कर सकते हैं? ये मेरा है बोलने का चांसेस रहता, right? Of course you have a long legal battle too. That is the reason why generally lease agreements and all is for only for how many months? 11 months only. Renewable is there. So the point here is, exception is there. If the lease is for less than 1 year, then the lessee will not be deemed to be the owner. But if the lease is for more than 1 year, 12 months, and extendable like that for a period of 12 years or more, then in such situation, who shall be deemed to be the owner of that particular property? The lessee shall be the owner of that particular property. That is, deemed owner here acquired the right in a building under section 269 UAF. What is the 269 UAF? Where a person who acquires the rights in respect of any building or part thereof by virtue of a sale or exchange or lease for not less than 12 years. Exception is what? In case if the property is given on a lease basis for less than 12 months, then lessee shall not be the deemed owner. So totally 5 aspects that they want to cover through section 27. Let me put the clarity onto this. In case if the property is transferred for inadequate consideration to the spouse or the minor child, then in that situation transferor shall be deemed to be the legal owner. Exception is that where the transfer is made under an arrangement to live apart. And number 2 is, in case of HUF, karta of the house property, karta of that Hindu undivided family shall be deemed to be the legal owner of that. Why I am saying karta? Senior most member of the family is only the karta. So senior most member of the family shall be deemed to be the legal owner. Similarly, in case of the house properties owned by the companies or societies, the allottees or the members shall be deemed to be the legal owners, shall be deemed to be the owners. And then power of attorney holders shall be deemed to be the owners of the property. Similarly, if the transfer is made for under part performance of a contract referred under section 53A of Transfer of Property Act, then the transferee of the property, although not the legal owner, shall be deemed to be the legal owner is the point. And then friends, we have, in case if the property is given on a lease, and in that case the lessee shall be deemed to be the legal owner of the property, in case if the lease period is for a period not less than 12 years is the point. With that, we completed section 27. We completed 2 sections, friends. What are those 2 sections? Section 22 and section 27. 22 deals with what? Chargeability. 27 deals with what? Deemed ownership. Now we have section 23. 23 deals with what? Annual value of the house property. 24 deals with what? Deductions against income from house property, that is against the net annual value. 25 deals with what? What is not deductible. 25A deals with what? Recovery of unrealized rent. 25AA deals with what? 25AA deals with the recovery of unrealized. 25B deals with what? Correct. Now we move to the annual value. This annual value for how many properties you have to do? 6 properties. What are those 6? Self-occupied, kept vacant throughout the previous year, deemed let out, partly self-occupied, partly let out, one on time basis, another on area basis, and then it is the co-ownership. But before that, let us start the story with the let out property, purely let out, fully let out. In that situation, how do you go about? For this, the methodology is given in step mechanism. For the first understanding, we will ignore the fact that there is any unrealized rent or the vacancy periods. Totally for 12 months it got let out. Then how do you go about it? Step 1, municipal rental value is to be compared with what? Fair rental value of the property. See, for levying the municipal taxes, your municipal authorities will fix up the what could be the rental value of that particular property. That is called as a municipal rental value. That is to be compared with the fair rent. What is fair rent? Let us suppose today we are in this particular premises. In the similar locality for a similar premises with similar facilities, that premises will fetch what rent? That is called as a fair rent. So you need to compare what? Municipal rental value is to be compared with the fair rental value. And then friends, of those two, whichever is higher, you have to take. And then step 2 is what? You have to compare that higher amount in the step 1 with the standard rent. With the standard rent. What is standard rent? Rent fixed under the Rent Control Act. Now the point, madam is already with the doubt. Practically is it there? Practically is it there or not? Here in Hyderabad I never found such thing, but it is not correct on my part to say that it is not at all there. Right. Now, law has not taken out this particular concept of standard rent, so we continue to live with it, at least for the CA exam purpose. Right. Standard rent is under the Rent Control Act. Now, what the law says? That is, of these two amounts, what are those two amounts, friends? Amount in the step 1 and the standard rent, whichever is lower, that amount is to be taken as step 2 amount. That step 2 amount is then to be compared with what? Actual rental value is to be compared with the actual rental value. Whichever is higher, you have to take it is the point. Whichever is higher, you have to take it. Now friends, what is the principle? Higher, lower, higher. What is it? Higher, lower, higher. That way you remember. Whichever is higher in the step 3, that is the annual value of the property. Now there will be no problem as long as there is no unrealized rent or vacancy period. Of course, with unrealized rent we are very comfortable. That is, what you need to do? In the step 3, when you came to the step 3, what you did? In the step 3, you are comparing the amount in the step 2 with what? Actual rental value. But you compare with what? Actual rental value less unrealized rent. That amount is to be compared with the step 2 amount, whichever is higher, that you take as the annual value of the property. But only when the vacancy is there, let us suppose property is let out for 9 months and vacant for 3 months, then only you should be slightly be careful. In what way? First, ignore the fact that it is vacant and make the comparison. In case if the actual rental value happens to be the annual value, then from such annual value, you reduce the vacancy period rent. That is the point. Of course, let me bring the clarity on this point to you. For example, municipal valuation is 80,000. Fair rental value is 90,000. Of these two, whichever is higher? Fair rental value is higher. So, 90,000 you have taken. Now, your standard rent is say is about 75,000. Step 2 amount is what? Step 2 amount is of these two, whichever is lower. Which is lower? 75,000 is lower. Let us suppose your actual rental value is only 60,000. Of these two amounts, which is higher? 75,000. Then don't give any deduction towards the vacancy periods. Don't give any deduction for the vacancy period. Why? Because SC is trying to fool us. When standard rent is 75,000, which fool will give for 60,000? So we say that if any person gives for a rent less than the standard rent, then his annual value will not be actual rental value. His annual value in that case will become the step 2 amount. There you don't give any leverage for that, any deduction for that particular vacancy period. Whereas, let us suppose his annual value is 90,000 rupees. Annual value is 90,000 rupees. Then what is the higher value? 90,000. Then you give the deduction for the what you call vacancy periods. So 90,000 is for 12 months. What is for 3 months? Quickly operate your calculator and tell me what is it. 90,000 divided by 12 into 3. 22,000. So that you reduce and say remaining is the annual value. Yes, friends. A student asked me a doubt. Sir, let us suppose actual rental value is 75,001 rupee. What will happen, sir? 75,001 rupee will be the higher amount. From there you have to give the deduction for 3 months. For 3 months deduction is available. Whereas if a person says it is 74,999, you are penalizing him by saying that 74,999 is less than the amount in the step 2. So amount in the step 2 only will be considered as the annual value without giving any deduction. Without giving any deduction. But I am helpless. Yes. Of course, for CA students I need not justify this, because all of you pretty well know what is the difference between 149 and 150. What is the difference between 299 and 300? What is the difference, Madhavi, between 299 and 300? Huh? What is the difference between 299 and 300? A rupee. For you it appears to be a rupee or 1, but it is a life. 6 months plus 3 more months of waiting for the results. The one who got 150 passed, 149 failed. Again he has to write all the 3 papers. Whether you have questioned there? No. That's where I always love to teach to the CA students, because they are very disciplined students, never question the authority of the teacher. Of course, blindly doing it is not correct, but try to see that where the difference is. So the point of interest here is, if you have got the concept of the vacancy period, I feel happy. Concept of unrealized rent differs from concept of the vacancy. In case of unrealized, what we are asking, you first deduct from the actual rental value the unrealized and then go for the comparison. Whichever is higher, that you take. But with respect to the vacancy, what I am saying, first don't deduct. As it is, compare as if that property is not vacant. In case if the annual value happens to be the actual rental value, because of actual rental value being more, then deduct the rent for the vacancy periods. Let us now visit this particular PowerPoint, what the PowerPoint says. Step 1, fair rent of the property and the municipal valuation of the property. A is fair rent of the property, B is the municipal value of the property. Whichever is higher, higher of A and B. Then next aspect is, standard rent is to be compared with what? Amount in the step 1, whichever is least of these two, A and B. Then step 3, rent actually received or receivable. How do you calculate rent actually received or receivable? Rent for the previous year or part of the previous year in which the property is available for letting out, less unrealized rent, that you call it as rent received or receivable, but before deducting the loss due to vacancy. Then step 4 is what? Consider the higher of 2 or 3. What is 2 or 3? 2 is what? Amount in the what you call step 2, and 3 is what? Amount in the step 3. Amount in the step 2 is to be compared with the actual rental value after deducting the unrealized rent. In case higher of 2 or 3 happens to be 3, 3 means actual rental value, then only we can deduct for the vacancy period rent to arrive at the annual value. So in case if the house remains vacant for the entire previous year, of course there you don't need to go for this particular provision. Straight away you can say annual value of the house property shall be taken as a nil is the point. And in no case the calculation in the step can exceed standard rent fixed by the Rent Control Act. That is step 2, what we said, amount in the step 1 or the standard rent, whichever is lower. That means your municipal valuation and fair rental value, any of them, if they happens to be more than the standard rent, we will restrict the rent only up to the standard rent up to the step 2, and that step 2 amount is to be compared with the actual rental value. Concept should be very clear. That is, as long as there is no unrealized rent or vacancy period loss, straight mechanism, municipal value or fair rental value, whichever is higher, that amount is to be compared with the standard rent, whichever is lower, that amount is to be compared with actual rental value, whichever is higher, is to be taken. Higher, lower, higher. In case of the unrealized rent, first deduct the unrealized rent and then make a comparison. Whichever is higher will be taken as the actual rental value. In case of the vacancy, first what you do, you compare the amount in the step 2 with the actual rental value, and in case if actual rental value is more, then you deduct for the vacancy period loss. Then of course friends, when you can deduct the unrealized rent, when you can deduct the unrealized rent subjected to the satisfaction of conditions. What are the conditions to be satisfied? First thing that you have to understand that if any amount of the rent is not capable of being realized, then such portion of the rent shall not be included in computing the actual rent received or receivable. Of course, in order to exclude such unrealized rent, the conditions to be satisfied are the tenancy must be bona fide tenancy. Tenancy must be a bona fide tenancy. It's not that I give the property to my friend and thereafter I say that he has not paid any rent to me. Bona fide, how do you check the bona fide? Very difficult. Facts and circumstances, what our friend is saying. Very good. Generally, bona fide means, as an auditors, when we say bona fide, whenever we express our opinion, stating that Raghu is a bona fide student, means what? He should be on the rolls of us. Only when we see the documentary evidence, we have to express our opinion. So here bona fide is what? Bona fide means, tenancy should be bona fide means, it must be with an lease agreement or a rental deed, like that. Then SSE has taken all reasonable steps to institute legal proceedings, and the next one situation is, the defaulting tenant has vacated or steps have been taken to compel him to vacate the property. See, when he still remains in his house, you cannot go and cry that there is an unrealized rent. पहले तुम क्या करो? उसको वहां से निकालने के लिए कोशिश करो. Either you vacate him or take all measures to see that he vacates the property. What are the measures? Bring the gundas and rowdies and pull all his belongings from the house and put them out? No, 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 that is not the point. You cut electricity line, you cut the water connection. These are some reasonable things that you can take. Despite of that, if human being is living in the house means, you have to cry. So here the defaulting tenant has vacated or steps have been taken to compel him to vacate the property. Similarly, third condition is the defaulting tenant is not in occupation of any other property of the SSE. हम यहाँ से निकाल के हमारा दूसरा हाउस प्रॉपर्टी में उसको प्लेस दिखा दिए तो उसका मतलब क्या है? Right. So you should be also clear with this point that the defaulting tenant is not in occupation of any other property of the SSE. And fourth condition is what? The SSE has taken all reasonable steps to institute the legal proceedings for the recovery of the unpaid rent. That is, first legal case must be filed against that fellow, or else he has to prove to the income tax officer that initiating the legal proceedings against him is waste. That fellow is a waste fellow, sir. Now even if we initiate the legal proceedings, we are only going to lose our money which we are paying to the lawyer to initiate the legal proceeding. You see, that is the reason why I am not doing it. If you can prove the same to the satisfaction of the assessing officer, then all these conditions, once they are met, then you are allowed to reduce the rent for the unrealized rent from the rent receivable is the point. So this is most important, more particularly in PCC level. A number of times they have asked the question by saying that what are the conditions to be met, satisfied to take the deduction for unrealized rent is the point.